You know that moment when price stalls, hesitates, and then snaps in the opposite direction with real violence? That's not randomness. That's a squat bar setting the trap and a buying or selling climax springing it. By the time this episode ends, you'll be able to spot both patterns on any M15 chart, call the reversal before it prints, and step out of trades with timing that feels almost unfair to the other side. I've been trading these setups on the M5, M15, and H1 for years, both on TradingView and MetaTrader 5. And I'll show you exactly how I read them. The problem here isn't finding trades. It's the exits. You're in a winner, the alligator's happy, but then price tops out and gives back half the move before your trailing stop gets hit. Or you see a reversal, but you hesitate because it looks messy on the lower time frame. That hesitation costs you. The squat bar and the climax patterns exist to solve this one thing. They tell you when the current move has exhausted itself and who's about to take the wheel. Who is this for? It's for anyone who's already trading with volume or momentum indicators and feels like something's missing. You've got the direction, but you lack the precise timing. It's for the trader who uses the alligator and fractal breaks, but keeps getting stopped out at the top and bottom of ranges because they don't read the final bar's character. And it's specifically valuable for price action traders who are sick of lagging moving averages. These patterns are leading indicators, not followers. They watch the market's internal effort. This is for the retail trader who knows that big banks and institutions leave footprints. The climax is a footprint. The squat bar is an intention. If you're on the M15 or H1, this is your edge. If you're only on M1, it's too noisy. And if you're in a bot that just fires market orders, these patterns will blow your mind because they add a filter that most automated logic can't understand yet. Let's walk through the actual process. I'm on TradingView right now, but the same logic works on MetaTrader 5 because I mirror my setups on both. First, load the alligator. Its lines represent the sleeping, waking, and eating phases of a trend. A squat bar only matters in context. The best squash happen when the alligator lines are flat or just crossing. That's a sleeping market. It means the move you're about to see has real fuel. Now, the squat bar itself. You're looking for a bar whose range is smaller than the previous few bars, but whose close is right at the extreme. It's not a simple inside bar. It's a tight range bar that closes in the direction of the impending breakout, while the high and low contract. I'm not talking about a single candle in isolation. I need to see a series of them compressing, like the market is holding its breath. Here's the step order. First, confirm the alligator structure. Second, mark the most recent fractal high and low. Third, identify the squat bar that closes near the extreme high with reduced range. Fourth, wait for the very next bar to break that extreme. If it's a selling climax, I want a bar that opens high, wicks up far, and closes in the lower half with a body that small. That open high close low is the climax signature. Why does this order matter? Because if you trade the squat bar before the break, you're gambling. The break confirms the exhaustion. The climax bar tells me the buyers are finally done, and the high-low reversal confirms the shift. I don't predict. I react to the pattern completion. The effort to push price higher resulted in a small net change. That's the squat. The climax is the final desperate push that fails. When I see a squat bar at a fractal resistance, I do two things. I tighten my stop on any long position to just below the squat's low, and I set an alert for the break. I don't jump in on the squat bar itself. I wait for the climax's close. The high-low reversal bar is the final confirmation. It makes its high, then its low, then closes near the middle or lower. That's the point where I accept entry. This sequence takes minutes on M15, but it's mechanical. Two more details. First, always measure the prior impulse move. If the move into the fractal was only 10 pips, the climax means less. I need at least a swing of 30 pips on M15 to take this seriously. Second, the spread matters. On low liquidity pairs during the Asian session, the climax wick is often just spread noise. I only trade these patterns during London or New York when the volume is real. Let's run a real test. Yesterday on the Eurist M15, I saw a clean set. We had an uptrend for 20 bars, alligator lines properly stacked. A fractal high at 1.0840. Then price pulled back 9 pips. 3 squat bars printed right under 1.0838, each with a smaller range than the one before. I placed my alert. 4 bars later, the climax printed. It opened at 1.0842, wick it up to 1.0851, and closed at 1.0835. The high was a 12-pip rejection. The next bar broke that squat low at 1.0830. I shorted at 1.0829. Stop loss at 1.0852, 22 pips risk. My target was the recent swing low at 1.0800, which was 29 pips away. Price moved down in a straight line. No alligator crossing, no fight. It hit my target in 40 minutes. Net profit was 29 pips minus 2 pips spread, so 27 pips. One trade, one setup. The file size of my chart template? Not relevant, but the setup itself is clean enough to code into a simple strategy. Now, the price of the indicator suite I use for tracking these patterns is licensed, and the alert for the Climax is custom built. But you can spot them with raw candlesticks. No cost at all. Time spent on the chart was about 15 minutes for that one trade. The output quality was a perfect risk to reward at 1.3 to 1. Not a home run, but in a week of dozens of those, it compounds. Here's the dirty truth. These patterns fail more often than you think. The squat bar is defined by range, but what constitutes a small range is subjective. I've seen traders call any quiet bar a squat, and they get chopped up all day. If the prior trend is too strong, the climax just gets absorbed. A selling climax in a powerful uptrend only leads to new highs 10 minutes later. I've been on the wrong side of that. It's ugly. Where it breaks down completely is in ranging, sideways markets. The alligator lines wrap around each other, and the fractals are tiny. A squat bar forms, a climax forms, but the reversal goes nowhere. You're stuck with a 20-pip gain or a loss, then price goes back to the middle. I avoid trading these in the hour before any major news event. The climax wicks become massive, and the range expansion on the news shift throws off all the measurements. If you're a news trader, skip these patterns. They are not for you. They require clean, organic flow. Also, the size of the climax bar matters more than the shape. If the climax body is too large, that's panic, not exhaustion. I need a small body with a huge wick. If you push the pattern onto any time frame below M5, you'll see squats and climaxes every 5 minutes. 90% are false. Don't scalp these on M1. I tried it. It's a fast way to lose money. These are swing setup patterns that need room to develop. And don't use this as a standalone entry. You still need the alligator direction behind you. If you go short on a selling climax against an alligator that's stacked bullish, there's no edge. It's noise. The obvious alternative is the standard MACD divergence. You've got price making a higher high, and the histogram making a lower high. It's the same principle of exhaustion, but MACD is slower. The squat and climax are observed on the current bar. MACD confirms in hindsight about 3 to 5 bars later. On M15, that's sometimes a 75-pip price move difference. The one place it wins is in ultra-choppy markets where no squat ever forms cleanly. MACD divergence will still print a signal, albeit late, while the chaos setup gives you nothing. If you're a trader who demands a signal every single day, MACD fills the gap. Just know that its late confirmations eat your profit margin. For patient traders who want the real turn, squat and climax beat it. But if you're an overtrader, MACD will keep you in the game, even if it keeps you less profitable. Today, open an M15 chart on your preferred pair. Find a clean fractal high. Wait for the market to pull back, then pause. Look for the smallest body and the tightest range under that fractal. Don't trade it. Just mark it with a line. Then watch what the next bar does. Do that 3 times without entering. Get familiar with how the climax looks when it's real versus when it's a trap. Your eyes need training before your trigger finger does. I'll see you in the next episode with the Holy Grail, combining fractal, alligator, AO, and AC into a single setup that filters out the noise for good.